my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. I'll start with ICE raw New York sugar. It looks like I may not have missed much whilst I was away on annual leave here. The only things of note has been a break higher into a horn top at the end of June and into July from a seeming head and shoulders continuation pattern that fizzled out soon thereafter into a horn top. The most recent significant move was the combined key reversal down and bearish engulfing pattern made Monday 2 weeks ago. That had a follow through lower that lasted until the start of last week, but was halted by the combined support between 1630 and 1681, which includes within it the 2021 50% Fibonacci line at 1681, as well as the fairly flatlining medium moving average, currently 1671. This halt opened the way for last Thursday's immediate countering key reversal up and bullish engulfing pattern. However, as a reactionary move, it lacked depth, and we are today on for another key reversal down. So if we close tonight below 1733, then we'll be on. However, I'm not too hopeful for any significant follow through lower after all. We are so close to the support band 1630 to 1681 that you may only have a small move lower after all that. Nevertheless, we shall see. It's interesting that I also have so often repeated these words. Initially answered some 5 weeks ago, this market is still, and I quote, going to go between the supports 1630, 1681 up to the 50% 21st century absolute Fibonacci line at 1809, end of quote. That's it, until it changes, of course. One day this market is going to make a break, one way or another. For the moment, the recent head and shoulders pattern is dormant, and the middle time, currently 1742 of the ever so mildly bullish December 2020 to March 2021 shift pitchfork, is just showing a gentle direction higher, despite the key reversals down. ICE Europe white sugar. The earlier drawn February to May bearish Andrews pitchfork continues to give the bearish angle of attack until it was no longer able to. It's now been replaced with the more shallowly bearish shift pitchfork for the same move. The market is in between a declining middle time, currently at 442.40, and the upper time, currently 478.5. Okay, so since the end of June, when the market reached the downside target for the April to June head and shoulders top, we've seen the recovery back up, all the way up to the combination of the following: short medium moving average currently at 447.30, the medium moving average currently 448.5, and the current 50% Fibonacci line for 2021, which is actually not that different from the early one, and that's at 451.40. Please remember these numbers, as they will shortly become important again. Anyway, what was interesting was the move up breached all of those overhead resistances, but did not close over any of them in that period up there. That's 2 to 3 weeks ago. This failure to really break this overhead resistance, especially on a closing basis, caused a subsequent decline that finally halted last week down at 412.5, which really was broken once again at the interesting 38.2% Fibonacci line of the April 2020 to February 2021 move at 419.30. Now, we had the break back up late last week and continuing this week with today's action, which looks right now like a gapping higher, but nevertheless still bearish opening black marrow bows. Now, you remember I asked you to keep those moving averages, the 2 moving averages and the 50% Fibonacci line in mind earlier. Well, right now it looks like we may close below most of them, if not all of them, as they are lower than 3 weeks, even as they're lower than 3 weeks ago. But the market is still below of all the 50% Fibonacci line at 451.40. It will be interesting where we close tonight, as today's pattern is looking like a bearish belt hold right now as well. This is a significantly accurate pattern if tradition and the data is to believe, which I actually do believe on both. I would finally also like to point out one other feature. At the current count, we have a possible big double top over 2021, a possible smaller double bottom over March to July, and an even smaller double bottom over June to July. I'm hoping soon to have these sort their priorities out and give a clearer signal from them as well, and possibly some ideas on the downside or top side. Probably on the downside, I think, at the moment. White premium spread, sugar white premium spread. A very clear pattern last week here. A weekly key reversal up based on the middle time, currently 48 and a quarter, of the big bearish May 2020 to February 2021 Andrews pitchfork. This pitchfork has been showing the bearish angle of attack of this market since February. As I said some 3 weeks ago, and I quote, please note, this is a declining support, as is appropriate for a bearish pitchfork. So please do not think of it as any form of counter to the overall bearish incentive. That is currently evident here. It is, as I pointed out 2 weeks ago, which is actually now 5 weeks ago. Until we see the market move out of these strictures, then this bearish pitchfork will prevail. And that's the end of the quote. So, this week we've started with a gapping move higher, which the market seems to be trying to sort of fill. The nearest overhead resistance of note is the neckline of February to November 2020 failed head and shoulders top, currently at 75 even. This is not a strong resistance, and I am a little surprised to see the market slow down before it and look as if it might turn back down. The next real resistance of note is the 50% Fibonacci line of the 2021 move at 79 even. However, I think the upper time, currently at 83 and a quarter, of the same bearish Andrews pitchfork that has been previously mentioned, along with its current partners, the medium moving average, currently 83 and 3/4, and the long moving average, currently 83 and a quarter, they are the ones to watch on the top side if you are interested. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.